Hi everybody, in this video we are going to discuss about fund accounting class. So for this fund accounting class I have prepared this PDF. If you want to download, you can download, link provided in description. Now come to the point, what is meant by fund accounting? Explanation to fund accounting. Here fund accounting means we need some specialization in accounting process. So here they will focus on tracking, managing the financial operations of investment funds, mutual funds, hedge funds, private equity funds, pension funds, or real estate funds, etc. etc. So these are main focus of this fund accounting. Here, unlikely, normally our traditional accounting, which we will primarily track on profit and loss, whereas fund accounting is mainly accountability of over financial resource and ensuring compliance with regulatory standards. If it is the fund house is registered in USA, so they will follow USA gap. If they are in Luxembourg, they will follow Luxembourg gap. Or if they are in India, they will follow IFRS. So they will see this complaints also by this fund accounting. Now, what is the role of fund accounting? Here, the fund accountant who is joining is the responsible for maintaining the financial records of fund, and he need to ensure accurately and timely reporting the fund data. And here the main key responsibilities which include in for the fund accounting is daily work will be daily NAV calculation, that is NAV calculation. Here the stock market will open morning and close at 3:30 p.m. and the fund accountants or the fund houses will need to update their NAV and daily basis within up to 11:30 time, so 11:30 p.m. So that the daily the fund accountant will calculate this NAV calculation. So we need to accurate calculation of fund NAV on daily basis. Next, reconciliation. We maintain internal records with external records. Like external records means the custodians or brokers. So we need to ensure that our internal records and that external records was matching and was there consistently and accurately matching the all information. Next responsibility will be financial reporting. Here he need to preparing periodical financial reports and statements for the fund. So the fund financial reports he will take care, and he will take care the important metrics like IRR metric or expense ratio metric or NAV metric. These all are he will take care. Next, he will the responsible for regulatory compliance. The fund operations are compliance with regulatory requirements, maybe IFRS or gap or US gap or Luxembourg gap. So where they are registered, they will maintain the. Here we will see the master fund, feeder fund with the location they are registered. Next, audit coordination. So this fund accountant will need to coordinate with the auditor. So here the auditor means the working professional who is external auditor during the audit process. The fund accountant need to provide necessary documents and explanations about the funds. Next, investor relationship management. Here investors means normally these limited partners, whoever the limited partners who invested amount in these funds. For that person, this fund accountant will need to provide the information and support to the investor relationship team. Now we will see the live example of this companies or these responsibilities. For example, BlackRock Incorporation company is there, and it is the one of the largest asset management firm, so AMC company. Now it provides a good example of fund accounting in practice. Here they will manage wide range of investment funds like mutual funds, ETF, private equity, real estate, etc. etc. Now who is working as a fund accountant at BlackRock, he need to play a crucial role in ensuring about the accuracy and integrity of financial data, and which is essential for investors. They need trust regulatory compliance. So investor who invested the money, he will trust on this fund accountant of that company. Now example we will see a fund account at BlackRock is responsible for calculation of NAV of mutual fund that invest both equities and fixed income. So the fund house may go invest in equities or they may go with the debt or that means they will have fixed income. So next if we are investing more on equities, this is nature of aggressive where we are investing more on fixed income nature. It is conservative approach. Now they will start the day by gathering the latest market price for the securities held in the fund. So then they need to adjust this price for any corporations like dividends, stocks, splits, and they need to calculate the total value of the fund assets. So for that NAV we need to adjust all items, and from that we need to deduct any liabilities such as management fee, custodial fee. We need to arrive the NAV. This value which we are calculated the NAV used for the price of the share of the fund. If any investor want to go out and they need to fund house need to pay the amount, by using this NAV they will pay the amount. Okay, the fund of content responsibilities is clear. Now, if we are entering into fund accountant, then what is the basic base? So the salary of the fund accounting are very significantly depending on the location and level of experience and size of the firm. Here we will provide some guidelines, like for example if you are entry level fund accountant, typically you will earn $50,000 to $70,000 per year. And if you are a mid-level fund accountant, then you within a few years of experience you can earn $70 and 1 lakh per year. If you become a senior fund accountant, then you will earn between 1 lakh to 1.5 lakhs per year. And fund accounting manager, if you become a fund accounting manager, then manager roles can earn upwards of 1 lakh $50 per year. These figures was vary with the higher salaries major finance hub like New York City, London, Hong Kong. These are the major areas where fund houses are there. Now here based on that amount, not only the salary, you will get the additional bonuses and incentives are common in this field. Especially if this is a large asset management firms, you will get more additional bonuses and incentives. If you are a investment banker, then these incentives are bonus sometimes more than the base salary also you cannot, you will get in some cases. This is the major. Next, now we need to know about some terms of for fund accounting. First of all, what is mean by fund here? Fund means a pool of money collected from investors for the purpose of investing in securities. Here the securities such as stocks, bonds, real estate. Example including mutual funds, hedge funds, private equity. Now if here they are pooling money from the investors. Who is these investors? If we take the mutual fund is the base, then the investors may be salaried employees or retired employee persons or small investors, because the base amount here you may invest 500 or 1000, any amount you can start. Whereas this private equity and hedge funds, here mainly they will go with the HNIs, high net worth individual persons or institutional investors. These are the main persons they will focus. This is funds, so they will collect money from this type of persons and they will invest in some securities like stocks, bonds, real estate, etc. They will earn some amount, they deduct some management fee and they will share the profits to these persons. Okay, now after that we will see about custody. So next term will be custody. Custody means here the safekeeping of the fund assets. Here the fund house they are pooling money from investors. They are purchasing some securities. Then these securities assets, these securities become the assets of the company. These assets, fund assets, they will keep safekeeping. They will use this custody services. A custodian is a financial institution who is responsible for holding and safeguarding the securities owned by the fund. Here the fund holds stocks, bonds, real estate, etc. So then they are not misappropriated. For example, majorly why these custodians will come into picture means, if we take here the same example, the fund house is there and the investors is there and they are given money, they are invested some bonds or real estate, some bonds is there. Now whenever if these bonds are exist with this fund house, the investor get some worry, because if any amount, sometimes for the pressure, if the fund house is have more pressure, they will sell this securities. That type of fear will be there to these investors. So when this fund house, this securities was kept in this type of custody houses, then the investors have reliable on this fund house, reliable on this custody houses, then they were invest more amount because their assets, ultimately these assets were purchased by fund, but this ultimate owner will be these investors. They have the reliable only on the third party who is the custodian. It is like a putting gold in bankers, so bank locker. Next, investment manager. Here investment manager means who is a professional or firm who is responsible for making investment decisions for the fund, and they will manage the portfolio of assets in line with the fund objective. So what is the fund objective? So if the fund objective is private equity, they will ensure investment is going on same objective. If the fund objective is real estate, so they will get that decisions, responsible for decisions to invest amounts in real estate only. Next, who is the client here? Here investors who have put their money into the fund, and the persons may be individuals, the institutions or other entities are who are seeking return from the investment strategy, who is managed by the fund. Now, fund accounting is the main. So, we are the fund accountants. Here, the process of accounting for the financial transactions and performance of the fund. Here, it involves we need to record all incomes. So, incomes means dividend incomes or capital gains or interest income, etc., etc. Transactions and performance. So, and it also involves recording incomes, expenses means management fee, performance fee, etc., etc. Gains, if the fund sold some assets, real assets, then it will get gains or losses. Sometimes we need to also book unrealized gain or unrealized loss, and ensuring compliance with regulatory standards. Next, NAV means the net asset value, the value of the fund assets. So whatever the fund assets value minus and its liabilities, then we need to divide. So assets minus liabilities divided by the number of outstanding shares or units which is existing that fund houses. It is critical metric for pricing of the fund's share. Now, base currency. Base currency means here the currency in which the fund is performing, which is measuring, which is reporting. It is as usually currency in which the fund is located, denominated. If it is a Indian company, it will denote in US. If it is US, they will provide in USD dollars. Next, for example, if we take the live examples of the above, for example, Vanguard Group is there. The fund Vanguard Group Total Stock Market Index Fund. Fund will be Vanguard's Total Stock Market Index Fund. The custody for this persons, Vanguard partners with custodian like JP Morgan Chase for safekeeping of assets. So this is the custodian. This is the fund house. This is the fund market index of funds. Next, investment manager. Vanguard investment management team with the person is there is the team, and clients will be individual investors, institutional investors, or HNIs, or etc., etc. And fund accounting. This fund accounting, who is the Vanguard internal team here handling the fund accounting, ensuring accurate NAV calculation, transaction processing and compliance. So it has its internal team. Some persons they will outsource this accounting to some other company like a Citco company or BNY, etc., etc. Next, NAV calculation. Here NAV calculation will be calculated daily because the stock market is up to 3:30. After that, within from 3:30 to 11:30, we need to update the NAV for that day, reflecting the fund total assets, total value minus liabilities. Base currency means USD. For the most of their funds will have base currency. If you take the straight street corporation fund will be ETF trust, ESPDR S&P 500 ETF trust. It is the fund, and this fund's custody will be state street fund, and trust company act as a custodian will be for this corporation. So this state street corporation custodian will be state street bank, and trust company is the custodian, and investment manager will be state street global advisories, and these clients will be individual institutional investors looking for the exposure to the S&P 500. And fund accounting, here the fund accounting state street comprehensive fund accounting services insurance means state street will take care the fund accounting services regulatory. Next, NAV will be calculated based on daily basis on the market value of underlying securities. Here also base currency will be USD. Next, if you take the example of BlackRock, so BlackRock near real fund will be high shares MSC emerging market ETF. So market ETF is the fund, and the custodian will be Bank of New York means BNY Milan, and Citibank will be the custodian for this BlackRock, and investment managers will be BlackRock fund advisors will be the investment managers, and clients will be global investors including individuals, institutional investors, and pension funds. And fund accounting will be BlackRock has dedicated team for fund accounting. So they have their internal team for the responsible for NAV calculation, transaction reconciliation, and financial reporting. NAV will be updated daily to reflect other market value of portfolio. Here the base currency will be USD. Okay. Now other related information. Here main information will be expense ratio. Expense ratio means the annual fee which the funds has charged their shareholders expressed as percentage of the fund average assets. It includes management fee, administrative fee, or other operational cost or performance fee. Whatever the expenses they are paying, whatever the fees they are paying, whatever the fees they are charging, they will express in terms of percentage. What is the previous percentage, what is the current percentage, is there increase, is there decrease, if there is variance is more, they will give the reasons, they will give the comments for that expense ratio. Next, yield means the income return on an investment such as interest or dividend received or expressed annually as a percentage of investment cost. Next, portfolio turnover. Here the measure how frequently assets within your fund are bought or how sold by the investment manager. We will see the high turnover can be indicative active management. If the management is active, they firm has high turnover. If the turnover indicating the low, they are in a buy and hold strategy. So we will see the which active management or buy and hold strategy they are following. Next, distribution. Distribution means payment made to fund investors from income generated by the fund's investment. These can include dividend, interest income, capital gains, etc. These are distributed to the investor, the fund houses, where benchmark or this is the standard against which performance of a fund is compared. So they will get they compared with this benchmark like common benchmark like S&P 500 or Libar or MIBAR or MSCI World Index. These are the benchmarks. They will compare whether the benchmark is crossing or not. Then only they will take the management fee, or then they will get the performance or incentive fees. Next, load means a fee charged to investors when they buy or sell, that is front end or back end shades of a fund. Some funds are no load. For example, if you see, they have three types of ends: open ended, close ended, and interval funds. Open ended means investor, who is the investor person, they can buy, they can sell at any time, they do not have the time restriction. Whereas if you go with the close ended, they will kept to that time at the time of fund he is launching, that is in a four period new fund offer period itself, they will explain the time. And interval fund means they will have the maturity time, and in between the maturity they will give some time, some days, 10 to 15 days, for if you want any person investor want to go, and they will give the amount. If any person want to come, they will contribute the amounts. So this type of funds, if mutual funds will go with the open ended, private equity will go with the close ended, and the hedge funds will also go with the open ended. Here the open ended means any person who is coming and going, the fund houses calculations will be disturb. So so that they will charge some load, means they will charge some fee for entering, or whenever they are selling, this is load. And entities how fund accounting life cycle, how the fund accounting life cycle, this will be explained in next video.